Hi, welcome to the Market Alert for Thursday, the 11th of August 2022. Welcome to this episode of the Twilight Zone. Stocks, bonds and gold saw a sliding CPI sparks dovish dump in rate hike odds. And US consumer price inflation slows in July. Real wages continue to tumble. Of course they do, because there's inflation. Wall Street rallied after softer than expected CPI data triggered a broad dovish market reaction. So yesterday's numbers 0.0, forecast 0.2 and 1.3. Now I accept the fact that energy prices dropped a bit, but this is just, like I say, it's Twilight Zone stuff, isn't it? So CPI at 0.0% for the month of, where are we now? August, July. So July's CPI numbers at 0.0%. There's nothing else I can say, is there? You know, everybody who saw those numbers yesterday were just dumbfounded that they could come out at 0.0% given the current climate and supply chain problems and everything else. So it's just purely engineered, isn't it? It just depends what you put in the basket to do the calculations. Anyway, gold-silver ratio. Just more or less sideways yesterday, not doing a lot. So let's get on and have a look at the markets and kick off with the Dow's reaction to these wonderful CPI numbers. So as you can see, the market trading up sharply through the 89 and the high to the left yesterday, and continuing to do so as well. And there's going to be no end to this now. The market's got what it wants for the next month. In order to continue to the upside. Even geopolitical news items don't seem to make any difference at this point. So a close above 33,459 is the next upside target, followed by the 200 MA, and then we've got all this resistance to the left. From this low up to the current point is just under 3,000 points so far in the last month for the Dow, and it will continue in that direction. Monthly chart also shows prices trading back above the 38, which I've removed, 50% retracement there. It's got this 20 bar moving average in between the 50 and the 62, but you can see there we're heading back up to those all-time highs there. And in the 30-minute chart, the market's reaction, well, it was just straight up, wasn't it? The market moving up, if we just have a look, 100, 200, 300, 400 points. And then for the next few hours, the market continued up for another 100 points, which, good 500, 600 point move for the Dow yesterday. The moment sitting on yesterday's high, which you can see there, and again, if it can hold on the high and move higher, unless they want to try and wrong foot people today and bring the market back for a breather. I mean, it is due for a correction, because if you look at the daily chart, it's just green all the way apart from the odd day there. So due for a correction, but at this point, like I say, continuing to move strongly to the upside. So the high should become support for this market. In the German DAX, not as strong, but certainly up yesterday off the 50 bar moving average. We've still got the 62% retracement from this high down to the low to take out. And there's a good chance the market's going to do that during today. It's also got to take out the high of this bar here as well, where we saw some supply. We are in a situation now where the momentum is starting to drop off slightly as well for the stock markets. But despite that, it doesn't really matter. So the DAX also up strongly over the last few months as well, over the last month. So in the 30-minute chart yesterday morning, we saw the market with a lot of buying, bringing the market up, traded to the DP, held there throughout the morning, and then the market just gapped higher straight through the 200 MA, and then just continued all the way up, and it's currently above yesterday's high at the moment as well. You may get a bit of a pull back towards the high, find support, and then continue to move to the upside. As I've said before, when you've got a bullish market, you want to keep taking out the previous day's high, and we've already done that here with the DAX. It's like I said before, everything else is discounted. The only thing that they're focusing on is the CPI numbers, and that means that the interest rates won't go up, and they can go back to QE and continue to print, and the madness can continue. which appears to be the case. It'll only make it worse in the long run, but that's what they've done for the last, where are we now, 22, last 12 years. Kicking the can down the road is an art form that the central banks have got down to a T. Yesterday in the 5-minute chart, you can see the sell-off down to the S2, not much of a sell-off, and then the market moving up and then stuck in a sideways range, gapping higher, and then just trading sideways. You can see there it wasn't pretty lackluster, actually, to be honest with you. Considering when the Dow opened, did manage a bit of a move to the upside, and like I say, overnight prices gapping up and managing to stay above the high at the moment. So watch the high, a lot of support here with these green lines as well, plus the BRN, and the market already finding support at the 50 EMA. But watch the this BRN, and if we get a bit of a sell-off, watch the high as well. Like I say, the market will want to stay above yesterday's high to maintain that momentum we already seen. S&P taking out the 4203 level, which was over here way back in the beginning of June, before we had the other sell-off where the market found the bottom and then has since moved up. Again, just the odd red bar in the daily chart. Very strong moves to the upside at the moment. They keep talking about a bear squeeze. I'm not seeing much of a bear squeeze myself. I'm seeing a resumption of the market moving back to the all-time highs. And it's August. Nobody wants to sell in August. So, any sort of pullback is going to take place in September when everybody returns from holidays, etc. So S&P up strongly, straight off the DP, and again at the moment off the highs as well, which you can see there. It's a bit of a support, broke through overnight and is holding there at the moment. The FTSE also sideways, struggling a bit, not a strong reaction yesterday, but then in the UK we have inflation of 4,000 plus per year for gas and electricity that seems to be coming our way, and also the prospect of power cuts, which I see making the news headlines yesterday. I mean, if there's no inflation in America, we've certainly got that here. So I think that's probably the reason why the FTSE was tempered a bit yesterday in response. But saying that, overnight the market moving to the upside in playing catch up. It's got to go back through yesterday's high where the market reacted to the news. First the news, then the Dow moving higher. And in the yen yesterday, this down, dollar down, but finding support overnight. If you have a look at the retracements here from this low to this high, you'll see the market back at 78% retracement, finding support there. In the 30-minute chart, we saw the market move down sharply, but has then since found support and trying to get back above the DP there. It's going to be dollar dependent. We'll look at that in just a moment. Meanwhile, in the pound, this up sharply because the dollar fell out of bed, trading up to 89% and then moving down overnight, just finding a bit of support there at the 50 EMA. And in the 30-minute, in the pound, you can see the market trading straight through the 200 MA and then moving up slightly higher before then making its way back. But a big move in response to the US dollar. And finally, in the metals, you can see silver moving higher yesterday, stuck in a sideways range at 78% retracement. At the moment, holding above the 5-bar moving average. But given there's 0% inflation now in the US, for July, there's no reason for this market to hold. The only reason it fell out of bed yesterday is because obviously it takes the pressure off interest rate increases, which is positive for the currency. So the currency fell out of bed, and as silver and gold are priced in US dollars, when one goes down, one goes up in reverse relationship. You can see there that silver moving higher. But if you look at the 30-minute chart, you can see ever since getting to that high there, the market has made its way back down. So again, same with gold, market trading up to 89% retracement in the daily chart, and there you can see down, up, back to Tuesday's high, and then the market trading down and then continued down and taking out the low. So a bit of weakness there in the gold market as well. Dollar we've looked at, trading down to that 89%, coming off the low. I thought the volume would have been higher, but it's not. Probably as in the real contracts for this market in the dollar index, but tick volume not showing a great lot there. And crude oil also showing some buying for yesterday as it retraced down to 89% there. Okay, that's it for this one. This ends this episode of the Twilight Zone, where there doesn't seem to be any inflation in the US for July. And of course I'm being facetious and sarcastic because it just beggars belief, doesn't it? So let's see what the market does today, if it can continue to move to the upside. There's really nothing, like I say, we're in the summer madness anyway, and it's a case of why would you want to sell in August and create problems. The geopolitical news has disappeared off the radar. There's nothing about Ukraine and Russia anymore. It's just a given that that's going on. Taiwan and China's gone off the news, so there's nothing around unless there's a black swan event that comes out to send these markets down. It's just a matter of finding the opportunity, the most opportune retracement levels to get on the long side from what I can see at the moment. Okay, that's it for this one. As ever, thanks for watching. See you in the next.